Ladies and gentlemen, good day and welcome to the G.InfraEngineering Ltd Q3 and 9 months FY25 earnings conference call, hosted by Go India Advisors. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Saloni Ajmera from Go India Advisors. Thank you, and over to you, ma'am.
Good morning, everybody, and welcome to G.InfraEngineering Ltd earnings call to discuss the Quarter 3 and 9 months of FY25 operational and financial performance, hosted by Go India Advisors. We have on the call Mr. Harendra Singh, Chairman and Managing Director, Mr. Rajiv Mishra, CFO. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risks that the company faces. We now request Mr. Harendra Singh, sir, to take us through the company's business outlook and performance, subsequent to which we will open the floor to Q&A. Over to you, sir.
Thank you, Saloni. Good morning, and welcome to G.InfraEngineering earnings call for our Quarter 3 and 9 months FY25 results. As India celebrates 76th Republic Day, the country remains one of the bright spots on the global economy, and the nation stands poised to seize immense opportunity. I hope you had the chance to review the investor presentation and financial results, which are now available on the exchange. The government's continued focus on infrastructure creation will play a pivotal role in making the country the world's third largest economy in the foreseeable future, creating opportunities for millions of people. At G Infra, we believe we have a larger role to play in India's development agenda for now and into the future. On the strength of the intrinsic potential of our business model, prudent deployment of resources across every facet of our operations, we have been able to deliver exceptional performance in the 9-month FY25 and believe to do so in the coming years as well. G Infra has fortified its position as a reliable and important player in India's infrastructure and in the renewable sector. With a successful 22 years track record in constructing roads and highways across the country, and further we firmly believe that the execution of solar projects will gain momentum for sustainable growth, acting as a significant tailwind for our company in the coming years. Let me now provide some updates on the infrastructure sector. The Government of India's vision for infrastructure development is deeply rooted into its goal of making India a $5 trillion economy with a long-term outlook vision 2047, which inspired to make India a developed nation by its 100th year of independence. The National Infrastructure Pipeline, launched in 2019, is a key initiative of this journey, aligning closely with the Union Budget, which continues to allocate significant resources to infrastructure projects. The NFI began with an investment plan of 111 lakh crores rupees, covering key sectors like roads, railways, renewable energy, and water segment. Sector-wide progress against the NIP and the Budget 25-26 allocations clearly that the center has re-emphasized its strategy focus on Viksit Bharat 2047 and infrastructure development in roads and railways, a key catalyst of this journey. The government has enhanced the budget for roads and highways by 2.4%, paving the way for accelerated infrastructure growth and unlocking newer opportunities for our companies like ours to drive innovation and nation building. As highlighted in the budget, each infrastructure-related ministry is set to develop a comprehensive 3-year project pipeline under the PPP model. This strategy move will help us bolster investors' confidence, attract greater private sector participation, and unlock large-scale project opportunities. Additionally, it will establish a robust and continuous pipeline of projects ensuring long-term sustainable growth in the infrastructure sector. Renewable energy and the transmission sector, where India has set a target to achieve 500 gigawatt of renewable energy capacity by 2030, reinforcement its commitment to green energy. The government is also focusing on battery energy storage systems, that is BESS, to stabilize the grid and improve power reliability. The union budget includes investment in green energy corridors and transmission line expansion to support large-scale solar park and wind power generation. In addition, the MNRE budget of 25-26 has been allocated at 26,000 crores, marking 53% increase from its previous year, further strengthening India's renewable energy ambitions. Water and irrigation programs like Jal Jeevan Mission and additionally focus on river linking projects, wherein that strengthening the India's water infrastructure will enable us to have a good opportunities in water sector as well. We as a company see abundant opportunities in all above sectors. We have traveled long journey of 7 years after listing of the company, and as today we can proudly say that we are on right track, and with our attraction in renewable energy sector and preparedness to execute big ticket size projects and enter into another segment like transmission and water. With this positive tone of my statement, let me begin by sharing the journey of this quarter and providing you with a glimpse of our operational highlights. As of 9 months FY25, the order books stood at rupees 15,080 crore, with roads and highways stand at 11,235 crore, railways and metro at 2,289 crores, and solar at 1,556 crore. Our order book comprises 33% from HAM, 67% from EPC, and segment-wise road and highway contribute 75%, railways 15%, and solar 10%. Let me now provide an update on our ongoing EPC project. The Ganga Expressway project is at 81.2% completion and progressing as planned. The same is expected to be complete in next few months. And the Delhi UER project, which has almost completed, only COD is awaited. The Kali Mandir Jamshedpur project, which is again a EPC project of NHAI, is at an initial stage and currently at 5.4% progress. The progress has a bit delayed because of some changes in the design from the authorities. The Neelmanga Tumkur project, which is a EPC of NHAI, was stalled for the last 6 months, stands at 32.7% because of the land issue. The settlement agreement with NHAI was executed in December 24. NHAI and we will complete the remaining work of phase 1 by March 26 and phase 2 by March 27. And as per the settlement agreement, the project cost has now been revised, de-scoping certain portion of ROBs from rupees 844 crores to 650 crores. LOA from MSRDC, these two projects of Nagpur Chandrapur, is likely to be received by March 25. With the delay mainly caused because of on account of land acquisition and some alignment changes. Let me brief you on the progress of the HAM projects. The Karnal Ring Road project has reached 55.1% completion, and meanwhile the Raipur Visakhapatnam projects that are OD56 and AP1 projects, they are around 85% and 93%. So we are on track to finish all three projects of AP OD56 by this financial year, and having received the PCC as per the settlement agreement, we have already applied the PCC. The Khammam-Devarapalle project KD1 and 2, they have made solid progress with around 70% progress each. Both the projects will likely to be completed, where the PCC is aligned within this quarter only, and the balance of completion by June 25. Discussions on the monetization of these 5 assets which are nearing completion are set to begin soon, and we anticipate that the entire monetization process will be concluded in this financial year, in the upcoming financial year. Update on the monetization of 4 assets which earlier we had executed. As informed earlier, we have successfully monetized our 3 projects, wherein 315 crore were received in FY23-24 and remaining 54 crore will be received in October 24. That is post approval of NHAI related to GST change in law claim. Regarding the 4th HAM project, that is Rewari Bypass, NOC was received from NHAI and the lenders in March 24. However, because of some delay in the permission regarding ROBs, it has a bit delayed, but now the SPA conditions are compiled for and the transaction is likely to be completed in February 25. So there is around 133 crore expected to be received from Rewari Bypass proceeds in this quarter, where we have invested equity of 75.7 crores. Regarding equity requirement on HAM projects, the total equity requirement of 11 HAM projects, excluding Rewari bypass, stands at 1,733 crore. And as of now, December 24, 930 crore already has been infused. Remaining 123 crore is expected to be infused in 3 months of FY25, and balance 300 odd crore rupees to be infused in FY26 and around 300 in FY27. Turning onto the progress of the railway projects, the DMRC project, which is around 70.3% completed, though a bit delayed because of the land issue, now progressing as per the scheduled timelines. The Bilaspur Himachal Pradesh project, that is our RVNL project, is 51.6% complete, traversing well on target. The Kanpur railway station project is around 14.1% complete. So although initial challenges with land clearance and utility shifting have been addressed, now comb preparation in the state and railway traffic constraint has slowed down the execution of the full-scale construction. However, these challenges are expected to be resolved soon, allowing the progress to gain momentum in this quarter, and we will be able to complete this particular project well within the timeline only. The Dhule-Nardana project, which is at 55.3%, the Gaya, Somnagar and Karanjgaon projects, that is the Aurangabad project, are at 3.3 and 4.8% completion. The slow progress of these two projects is primarily due to design and drawing revision and some land issue by the authority. However, we expect the progress to pick up in the coming quarters. So, update on the solar project that in this financial year, we strategically seize significant opportunities within the rapidly expanding solar sector by actively pursuing solar power projects under the government's Kusum C scheme, which is designed to boost renewable energy development across India. Through these efforts, the company successfully secured 183 solar power plants, contributing a substantial 700 megawatt DC capacity in total. Of this, G.Infra is responsible, and out of this estimated, the cost is 2,243 crores EPC, that is excluding of GST. The land lease agreement in all of these projects is in place, and the PP has been signed by the DISCOM. And as of now, project progress has achieved around 30.6%, where the installation commissioning is according to the schedule. Debt funding for the solar project is in full swing, and approximately 70% of the project have received the sanction, with partial disbursement in place. The remaining sanctions followed by the disbursements are expected to be secured in Q4 25. Regarding project financing, the total equity required for this solar project is estimated at 721 crore. As of December 24, approximately 130 crore has been infused into the project. Another 220 crore is expected to be contributed during Q4 25, and with the remaining balance planned for FY26. This well-structured capital infusion plan ensures G.Infra has the financial flexibility to meet project milestones while fostering long-term growth in its renewable energy portfolio. Let me now share other significant updates for Q3 and 9 months of FY25. The appointed date for the Chennai-Tirupati HAM project has been declared at 14 December 24, and during the quarter we also received completion certificate for the Mancherial project. The LOA for 84 crore Sikh Parikrama Marg near to Ayodhya in Uttar Pradesh was received on 9 December 24, and Narrow Junction to Sarkhej, that is in Gujarat, on 9 September 24. Additionally, the 2A of newly awarded BEST projects has been received, NTPC project on 22nd November 24 and GVNL project on 3rd January 25. As previously mentioned, NTPC's BEST project is setting up 185 megawatt, that is 378 megawatt hour plant with a tariff of 2,38,000 per megawatt per month, generating an estimated 52.83 crores in annual revenue over the course of 12 years. The total projected revenue is approximately 633.96 crore. The GVNL's BEST project, which is setting up a 250 megawatt, that 500 megawatt hour plant, has a tariff of 2,25,985 per megawatt per month, is also expected to generate 68 crores in annual revenue, and over its 12-year tenure, the total revenue is projected to be 814 crores. Now I will provide an overview of the financial highlight of Q3 and 9 months FY25. As a standalone financial in Q3 FY25, our revenue from operations grew by 12%, reaching 1,509 crore, up from 1,346 crore in Q3 FY24. EBITDA for the quarter stood at 250 crore with a margin of 16.6% compared to 214 crore as a margin of 15.9% in the same period last year. PAT for the quarter stands at 137 crore and the PAT margin of 9.1%. Revenue for 9 months FY25 reached at 4,079 crore with an EBITDA of 668 crore with a margin of EBITDA margin of 16.4%, reflecting 19.8% increase compared to 9 months FY24. PAT for 9 months FY24 stood at 365 crore with a PAT margin of 8.9%. On a standalone basis, our gross debt stands at 1,329 crore. This comprises of 566 crores in working capital and other 763 crores of term loan and maturities. The increase in the total debt by 566 crores is attributed to the significant delay in the sanction of SPV's approval of all solar plants from DISCOM, and thereupon the sanctions and disbursement which got delayed, which has now been resolved and on a track, thus leading the time gap arrangement of debt, which is just one of the instances. However, the same will cool down and debt will be normalized in this quarter. Moving on to the consolidated financials, revenue of Q3 FY25 reached 1,265 crore with an EBITDA of 287 crores and EBITDA margin of 22.7%, reflecting a 25.7% increase to Q3 FY24. PAT for the Q3 FY25 stood at 115 crore with a PAT margin of 9.51% compared to 102 crore at the PAT margin of 7.5% in Q3 FY24. And the revenue of 9 months FY25 reached 3,695 crore, reflecting a 0.7% up slightly from 306,070 crore in 9 months FY24. EBITDA stood at 819 crore and with a margin of 22.2%, marking a 12.3% year-on increase from 729 crore and a 19.9% margin in the same period last year. PAT for 9 months FY25 was 358 crore with a profit margin of 9.7% compared to 349 crore and a margin of 9.5% in 9 months FY24. On a consolidated debt, which is 3,233 crore. Let us provide an outlook for the future. We have targeted an order inflow of 11,000 to 12,000 crore for FY25, and till date, we have successfully secured new order approximately 8,200 crore in projects from infrastructure and renewable, which includes the new project we have won yesterday only for the redevelopment of New Delhi railway station on EPC model, where we are 49% partner in the consortium. We are confident to maintain an EBITDA margin of 15 to 16% and achieve revenue growth of 17 to 18% in the upcoming quarters. Furthermore, we are actively pursuing opportunities in new segments while concentrating on operational efficiencies, prudent capital allocation, and strategic project selection to sustain margins and enhance shareholder value. That concludes my remark. We can now open the floor for the question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So before asking any questions, just needed all the balance sheet data points. So first, inventory, trade receivable, trade payable.
Yeah, inventory is 405 crores. And the debtors, that is the trade receivable, is 1,545 crores.
1,000?
And the other data you require is?
Sir, debtors you said 1,400?
545 crores. And
Okay.
trade payables is 1,075 crores.
1,075 crore. Okay. Unbilled revenue, mobilization advance and retention money.
So the retention money, this is included in debtor. Retention money is around 122 crore. And this is contract asset, which is unbilled revenue is 1,297 crores.
And mobilization advance?
This is 305 crore rupees.
305 crore. And sir, you mentioned the gross debt at standalone level is 1,319 crore?
Yeah, it's 1,387 crore. 1,329 crore.
1,329 crore. Okay. And cash is on standalone basis is?
This is around 200 crores rupees.
200 crore.
160 crore.
And sorry, sir?
Yeah. This is 160 crore rupees, not 200. 160.
160 crore.
Yes.
Yeah. And console cash is?
That I have not seen that. This is 180. 180. Console is 180.
180 crore. Okay. Okay. Got it. So now, sir, a couple of things in terms of so fourth quarter, now we are seeing a 17 to 18% kind of revenue growth. And for FY26, last time we said more than 15%. So that remains the same?
Yeah, that remains the same.
Okay. And in terms of the inflow, already we have received 1,200 crore and the remaining 3 to 4,000 odd crore. So if you can help us, how much we have already bidded the projects and even if the segment wise, and how much more are we planning to bid by March? So even if you can also help in terms of the bid pipeline segment wise.
Yeah, as we have received around 8,000 plus crores of project till date and around 17,000 crores of project in which highway is around 9,000 and railway is around 6,000 and solar, not solar to be very specific, it's a battery and solar mix which is around 1,100 crore rupees. So this is what already we have bidded. And apart from that, we are having a pipeline of highway and railway and not in solar as of now, which we will like to bid. And in solar, one of the EPC projects is there of ONGC that we will be bidding. So these are altogether around 72,000 crores of project. In highway specifically, it's more than 550,000. Railway around 18,000 and solar around 7,000. Solar or batteries is around 8,000.
Okay. Okay. Got it. And in terms of the...
I would request you to rejoin the queue for your follow-up question. Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Thanks for the opportunity, sir. My first question is, sir, what do you make out of the government announcement of PPP pipeline for 3 years? Do you think that we can see some progress on this front in next few months?
Not in few months, but definitely we are positioned in that manner because government is seeking the private investment to be there, especially in renewable, where the transmission is there. And apart from this, in highway also, they have seen that any project, which not many of the projects are now coming on EPC. So in that sector also, in water also, there is a high focus. Like in Eastern Rajasthan Canal project, they are invited the bids on HAM models. So they are all the projects which now government believes that the private investment is likely to be there.
Understood. My second question is, what is our share? I think you mentioned, but I missed out. What is our market? What is the share in the New Delhi redevelopment? What is the share in the JV? And are you still looking to bid more for the railway station redevelopment? And how is the pipeline for that?
See, as of now, I think immediately we are not having any of the old Delhi railway station likely to be there in coming future. But in this particular project, where the 49% stake is ours, where around 800 odd crore rupees of project exclusively is having the road elevated where they have to be built for this access to railway station like in the airport. And apart from this, we will be having some 300 odd crores of share coming to us as a 49% in other of the MEP works. So this is all about this New Delhi railway station.
And this is included in the 8,200 crore. Is that right, sir?
Sorry?
It is part of the order inflow which you announced 8,200 crore.
Yes, this is part of this inflow which we are totaling around 8,200 out of the estimated of this 11,000 for the year.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Yeah. Good morning, sir. Sir, just wanted to check it out on the new projects which we have recently received in the BESS segment. What would be the kind of investment we would be requiring in this, and typically what are the kind of the cash flow which we mentioned about the revenue from each of the project of 52 to 58 crores in each of this business. But how should we look into the cash flow point of view in this business? And what are the typical IRR profile in these kind of projects? And secondly, on the standalone debt front, there has been some rise from the last quarter to the extent of 500 crore. If you can elaborate more, what was the specific reason for that, and what has been the execution on the solar project at the current juncture?
Okay, so let us just first touch your point of debt, which has been significant increase in quarter 3 and also quarter 2 also it was gone very high. So the total solar project in which initial phase of land procurement to other activities where the ordering is to be done for securing the solar modules and other balance of plant. So that involves a lot of cash where the sanction which took time because there was some SPV approval which delayed by 2 to 3 months. And thereupon, in December end only, they started sanction, and then the disbursement. Now they have started in the month of January or February rather. So for that time-work arrangement, it went up to a very high number. But again, it will be coming back to the 600, 700 crores, which earlier we have estimated for. The second part which you are saying that the receivables also and the uncontracted asset also do have some kind of a scale higher because of that reason only. In solar, because we have executed around 700 crores plus and we are ordered for around 200 crores plus of fund being invested in order to the solar module. And this is how the big involvement of 1,000 crores into solar only. As far as the solar project, where we have already initially estimated that we will be having roughly around 18% EPC margin and around 14% plus of equity IRR, which we have initially estimated for. That remains the same. In battery projects, which we are talking about BESS, so these are the projects where we are going to set up the battery energy storage systems, where 65% of the total scope is around battery, and the 35% is the balance of plant where the substations and evacuation is to be there. So this is the entire scope of work. So we will be involving into doing this 30-35%, and directly SPV will be given the order to the other battery. So ultimately, we have secured this project with the target that we will be having the cash flow in this where around 14%, 15% of the equity IRR is maintained. And apart from this, the order which is coming to HG will have around 10 to 12%, even more than 12 to 13% of the EPC margin. So this is how I think the project of BESS do have the similar kind of a, say, as we are doing in HAM or we are doing in solar.
Okay. And sir, in terms of the scope of EPC work in this BESS, what will be the kind of scope of work for the this BESS project for us?
So as they explained that there's around 65% which is going out to generally the supplier, which is the bought out item, which is a battery container and the power distribution system, PDS. So but the other part is which is a civil and the transformer and the substation and the switchyard which is to develop. So this lies with the system which we are already integrating and doing it for solar projects also.
Okay. Thank you. And wish you all the best.
Thank you. The next question is from the line of Yash Dedinia from Maximal Capital. Please go ahead.
Good morning, sir. Sir, on the order book now, if I look at your order book, which currently stands at 15,000 crore, around 4,000 crore of MSRDC, sir, is not having the right visibility. In fact, some other players are not even counting it as part of their order book. So given this, now you are targeting 6,000 crore of revenue this year and 7,000 maybe next year. Sir, how viable is that? Because, X of these MSRDC projects, we are left with very little, sir.
So if your specific point is for the year, which we are estimating at about, say, getting 6,100 crores of around revenue in this year, with this quarter is only balance. So that is already not considering any MSRDC projects. Further to that,
no, sir, I am talking about FY26. FY25 is well understood, sir.
So in that scenario, which we are expecting around 15 to 70% growth year on year for 26. So out of this, we have has considered only a very small portion of MSRDC, that is roughly around 250 crore rupees. So because the land where the realignment is being done and the land acquisition is going at a very, not at a very fast pace, and the land of LOA, if you see any projects of NHI, wherein the letter of acceptance and actual appointed date usually will take around a year or so. So in that scenario, we believe that by May, if they secure 70% land and they release the LOA by March or say, and within 2 months of that, the appointed date is there. So in those projects, they are the big difference between NHI kind of a project where the land acquisition and appointed date LOA, and here the land acquisition LOA and the appointed date do not have a big, time gap.
So the question was basically from the remaining part of the order book, which is around 11,000 crore, excluding MSRDC. You are saying from that 11,000 crore, we can extract 6,500 crore plus of revenue next year?
You see, there is 2,300 crores of railway, in which this railway station project, if we add this number also, this becomes 3,300. So this 3,300 of railway, out of this significant portion is going to be carried out in next year, say around 1,500. Solar will all be completed because 1,500 crores of solar which balance is there, they will be all completed next year. If you see the big number coming out of the solar and railway and the HAM project, which we already are having 5,000 crore balance, and even in Ganga project, which is around 85 crore balance. See, these the numbers which we are operating as of now. So both altogether gives us the comfort that we will be reaching out very comfortably to 7,000.
Okay. And on the solar project, sir, now you are talking about 14 to 15% equity IRR, but then and then we are getting some margins from the EPC business also. So including the margins on the EPC business and also including the what?
This is return on equity is a separate portion, and the EPC margin which we are doing the EPC of solar, that is a different portion.
Yeah, so on EPC you would require some working capital, and then you require capex on which you are earning 14%. But if you include everything, sir, then how much of an equity IRR, including EPC, what is the total equity IRR, sir?
So equity is definitely 25% of the total project of 2,300 crores. So this is 700 crores. Out of 700 crores, if you look at the return, which is year-on-year basis, not upfront. So this is year-on-year basis. If you look into the EPC, which we are operating of 2,300 crores, so we are looking at around 18% margin, which are falling in within the timeline when we are doing this EPC.
Okay.
So you cannot just have totally of both together at one instance.
Okay. But sir, cash flow wise, if you draw it out and extract the IRR,
has given the indication because of the sanctions which were delayed. Sanctions were delayed not because of the bank. They, in principle, sanction was received somewhere in August or September only. But because of the SPV approval, which took almost 3 months, delayed for 3 months. So that's why this particular cash flow, which now already, say, around 400 crores of disbursement has been done within February only. So things are all now track.
Okay. Sir, on the road side, finally, I mean, we've been reading that, December onward, there has been some push from the government side to sort of give more orders because nothing happened till December. So are you seeing any tangible changes in the ground in terms of ordering which we can expect? Because till January also we haven't heard much, and now we are already in mid-February. So for this year and coming year, sir, are we seeing any changes on the ground? Because the spends are really low, even though the CapEx budget is there, but there is nothing which is coming as the real spends from the government. And then there are concerns that with the Bharatmala project mostly over, there is nothing much that is there in the pipeline from the government side anyway. So how are you looking at it, and what are the signs you are picking from the government, from the ground, sir?
So definitely, it has been delayed for a long, I think it's more than 1.5 years where nothing has been picked up as far as awarding is concerned or ordering is concerned. But I believe there are many projects which the government has also got the cabinet approval where the certain DPR, because now the focus is very clear that because of the time delay, there has been some prolongation costs, and so they are now focusing more on the first securing the land, having the all utilities alignment clear, then they will be looking into awarding, and this has been a bit delayed now. And the approvals which earlier was being very, if you see 2 years back, and now it is taking a bit of a time. So, but it's not that it's all projects are dried out and there are not any projects to be rolled out. So there are projects. We have also seen like Hyderabad Outer Ring Road is being announced, and where the EPC projects already, where the bid is likely to be invited. So it's not that the projects are not there, but definitely the traction as of now, what not we have seen, but I believe not big number is going to be there in Q4. But then upon I again is having the optimistic, say where the big amount of orders likely for coming from in NHA from only.
Thank you. The next question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity. So one thing on this battery energy storage. You mentioned 35% is the EPC. So size-wise, this will be how much in rupees crore?
Sorry, I couldn't understand your question. Please repeat, Karan.
Yeah, sorry. Yeah. So battery energy storage system, which you mentioned, 65% is the bought out component, 35% is the EPC that we'll be doing. So in that 35% in rupees crore, this tantamount to what number, sir?
It would be roughly around 500 crores.
That is for the 100%.
For the entire both the projects.
Yeah. So 500 crore, this includes your battery plus the balance of plant.
Yeah, apart from battery, yeah.
No, sorry, sir. I think I didn't get that. So 500 crore is EPC work.
Yeah, EPC work which will be done. This is 500 crore for both the projects, which is 35% of the both.
Okay. Sorry. I got it that. And then second, on I think you did briefly mention that we are also planning to enter into new verticals. And what I could gather is recently we also made one hire. In the senior management. So any particular segment that we are planning to enter, any color that you can provide will be helpful, sir.
So look, I think in the space which we have recently has entered, which is renewable or green, and in this particular transmission and say water, so these are the businesses which we always look that if the opportunity is now being invited on either into an NVT mode or even hybrid NVT. So these are the projects which we believe that we look forward that in any case for this instance when the highway projects are not many and the cost competitiveness and the aggression has gone very high, where we are not able to have at least the orders as well as margins. So in that scenario, we are looking beyond the space for this instance, like looking into the future opportunities, which their margins are also good, but the opportunities give both ways, where the equity IRR is fine as well as EPC margins are good.
Okay. And then just a clarification that the 500 crore battery energy storage you mentioned, so it is not yet part of our order book.
No, it's not that. No.
Okay, fine. Yeah, sure, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Sir, you mentioned that our total receivables is around 1445 crores. So out of that, what would be your HAM receivables and what would be from solar?
It is 1545, out of which solar constitutes 535.
And HAM?
And HAM is 375.
So, sir, we have seen some improved recoveries in Jan so far in month of Q4.
In solar, it has increased. No doubt it has increased in solar, as well as the contract asset also. And but now, since there are the projects which we are operating, which are nearing completion, like I expressed about Odisha projects and that, where there are contract receivables, which in COS variations, which all settlement agreement are executed. Now we are getting the payments within this. Like Rewari also, we had 100 odd crores of projects which were all executed but could not be billed. Now it has been billed. So we are now seeing that in quarter 4, maximum of this debtor receivables and contract assets, they are going to be within the range.
But solar would see an increase in as of March 25 as well.
No. Solar is not going to increase because the disbursement is not taking place. This is the disbursement is coming to SPV, and SPV definitely is going to pay the EPC liability.
Okay. So secondly, you mentioned that we are looking for a debt of closer to 600-700 odd crores. So that is by March 25 or is it a longer term target?
No. By March 25 only, because this I already has explained about it, because of the gap of 6 months where we want to secure the module orders, not to delay the time and the cost. So that was the big reason which we has increased a bit in this duration almost. But then again, it will be coming back to 600 to 700 only.
By March 25?
Yes.
And so lastly, when do we expect to receive the appointed dates for 4 HAM projects, BRK 2 packages and the 2 MOD, recently 1 HAM project?
Jharkhand project, they are advancing very well because earlier I think the forest land was not given the clarity, but now the replacement of the forest land has been given by NHI. So in that scenario, by March end or maximum in April, we will be getting the appointed date for both the projects. Also, in the Ahmedabad project, the land is 100% available. So as per the CA timelines, probably by April or May, we will be starting the project. We already have started the mobilization. And in Ayodhya also, by June, we will be taking on the appointed date.
And sir, you mentioned that MSRDC, we will be targeting revenue of 250 odd crores only for FY26, right?
Yes.
For both the packages combined?
Yeah, for both the packages, correct.
And when do we expect to start the project? In May, June or after monsoon?
No, they will be started post this monsoon only. Say by May, we are expecting that by March LOA and then 2 months down the line, entire mobilization and appointed date is being declared. So we believe that actual execution will be picked up post monsoon only.
Okay, thank you, sir. Those are my questions. I'll come back in queue.
Thank you.
Right.
The next question is from the line of Jainam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. So my first question is, after solid execution in H1 FY25 with 20% revenue growth, why have we seen a decrease in the revenue YY growth number of 12%? Like, is there any slowdown in execution?
See, there has been some issues with respect to the project which are Karnal and Delhi DMRC, and which are all nearby because of GRAP. So that is because of those significant delay has happened. Otherwise, if you have seen that the Ganga contributed around 500 crores, solar 350 crores, but in these projects the revenue doesn't trickle a lot. As well as in railway, it's a bit slow down at the initial phase because of the design, as already in the remarks I explained all those things. But if there is a gap of around just 100 to 150 crore, which would have been done even better. But this is all now sorted. In quarter 4, we believe that as initially has projected that we will be touching around 6,000 to plus crore. So around 2,000 plus crores of execution will be done in quarter 4.
Okay, sir. And initially, we have been guided with the order info guidance for with 11 to 12,000 crores of orders, and we believe that we are yet to meet the guidance by roughly 3,500 worth of crores. Are you confident about meeting the guidance number? Like, is there any key project that from which we are expecting the numbers to be met?
Now, with this new railway station order, this is around 8,200, and this includes MSRTC order also. And if that is, if you take it that order, then definitely we can't have the number which we expected. But no doubt it is 8,200, and what the bid which we have already has bidded, and the results are yet awaited, and the bid is likely to be there in 45 days from now, say 50 days from now, which we expect that around 2,000 to 3,000 odd crores of order can be easily be added.
So, what is your order inflow and revenue and margins guidance for FY26?
For the next year, we are expecting about 7,000 odd crores of execution, and with order inflow of around 10,000 crores.
And what about margins?
Margin always will be around in 15 to 16% that range.
All right, so that answers my question. Thank you so much.
Thank you. The next question is from the line of Parth Thakkar from JM Financial. Please go ahead.
Hi, thank you for the opportunity. Sir, will the interest cost in Q4 will be on similar line with quarter 3, or will it reduce?
See, as the total 72 odd crore rupees, the total in 9 months it has been there. So roughly around, say, it would be 20 crores. Say overall it will be in around 90 crore rupees for the year.
90 crore for the overall year, right?
Yes, yes.
Okay. And also, sir, how much revenue are we targeting from Nelamangala Tumkur project for FY26 and FY27?
So FY26 it would be roughly around 200 crore rupees, and FY27 balance everything will be completed.
Okay, thank you, sir. Those were my questions.
Thank you. The next follow-up question is from the line of Shravan Shah from Dolat Capital. Please go ahead. Mr. Shravan, I would request you to unmute your line and speak, please.
Yeah. Sir, how much capex we have done in 9 months, and for fourth quarter, how much planning to do, and for next year?
So we have done around 92 crore rupees of the capex during the year, and just I think few crores, I think 5 to 10 crore rupees in the quarter 4. And for the next year, we don't foresee any big number to be there. It's just around 40 to 50 odd crore rupees would be good enough for the next year.
Okay. And as you, sir, you mentioned that the working capital, you are looking at it to come down, and accordingly the debt level also will fall to 600-700 odd crore. So in terms of the working capital, particularly because now the solar, you said that the disbursement is happening, that will be helping. So even for next year also, as such, one should not be worrying in terms of the working capital increase in terms of the days.
So it's only what we had discussed about it. It's only a time gap which was because of the SPV approval, which took 3 months, 4 months delayed. So that is where I think the banks were not having any reservations. The in-principle approval was already received some time back. So it's only that. For next year, we don't foresee anything where the cash crunch of that increase in the working capital debt will be there.
Okay. And lastly, sir, you also mentioned in your opening remark that you are looking to monetize further 5 odd projects. So if you can help us, have you started any kind of a talk with the investors? And broadly, just a sense in terms of the total equity, obviously how much we have invested in a broader sense, if you can say, because the first deal was at much better valuation price to book, 1.5 times odd. So how one can look at in terms of the valuation there?
So as far as total equity which we have invested in this would be roughly around 770. So out of 770 we are expecting, and the discussion is already, we have started with a few of the say potential buyers, and I believe that as we are going to get the PCC for all 5 projects within the month of February only, as per the settlement agreement which we have executed, because there have been, in 3 of the projects, there have been some portion where the PCC 2 is going to be there, or COD is going to be a bit 3 months, 4 months down the line. So by June, we are expecting that all the projects will be, tentatively, all projects will be done, completed, So within 6 months of timeline, which we are expecting that if the deal can be done, and 6 months we then just started taking out the NOC from lenders as well as NHI. So this is quite, I think, going on well on track only. And then again, the valuation, you never know, but definitely, but we are expecting, and they are also have sounded quite a good valuation for these projects.
Okay, but in terms of the cash, most likely it would be by end of March 26, or maybe it would be in the 1H of FY27 that we will be getting the cash or equity back.
No, I don't see much of a challenge if that can be done within this year only. Because if you see February to February, it's a 1-year duration. If by PCC to that, again, the deal and then getting the NOC, everything can be done within the year only, 26.
Okay. And sir, are we open to bid for BOT toll projects now, or are we seeing any pipeline, and or are we liking any project where we would like to bid?
No, not yet. Anything related to BOT toll, which already we have has expressed our views that we would be happy working with any of the developers as a EPC as earlier we were doing.
Okay. And even for next year also, let's say if the road, let's say the inflow is not to the extent, or let's say the competition, as you are mentioning, the competition is too high in road. So to even reach a 10,000 odd crore, so if you can help us, how much are we looking at from the road and all the water, solar, or railway broadly?
Railway definitely is not always. Railway opportunities are EPC only, and we have looked into this kind of opportunity where the margins are around 11, 12, 13%. So this we believe that will be our priority. But then roads, if they are going to shrink their ordering, then we are looking into this water where the HAM opportunities are there. Like I have discussed with right now that Eastern Railway, Eastern Rajasthan Canal projects or in river linkages projects in the MP, UP, and there where the almost government of India has indicated around 90% of the funding will be given by central government. So those are the projects on HAM basis. So we will be looking into such opportunities.
Okay. Got it, sir. Thank you and all the best.
Thank you. The next question is from the line of Uttam Kumar from Axis Securities Limited. Please go ahead.
Yes, sir. Good morning, and thanks for the opportunity. Sir, in the opening remarks, you mentioned about transmission projects. So, what kind of transmission projects you are eyeing on, and what kind of order intake you are envisaging in transmission sector?
So, since we have had entered into this solar and renewable and battery, so we have seen the similarity. Let's say the solar is the power generation, and the power generation, then the evacuation, where this step up is being done with the substation and switchyard and other balance of all items. So in that scenario, we have seen that the transmission business, where there are TBCB kind of a business, which again gives the similarity of execution, where the certain part is EPC, where the foundation work is to be done. This is civil construction, which is around 30-35 crore percent. And there's a tower fabrication and erection. This is again a very simple kind of a project, and the substation. So this is a similarity. So what we are looking into, how we are exploring this opportunity, that going further, if we may opt for this, where both ways the return should be there. One is the equity return, and the second is the EPC margin. Not a big margin, which we can consider, but 10 to 12% always will be our focus.
Okay. And now, sir, coming to the labor issue, so most of the infra companies, they were citing labor issues in last 2 quarters. So, what has been same is the case with your company, or is it something different?
No, that definitely daily projects struggle because of the labor, because of the grab, and then the near to Delhi, and because of, say, in Bihar, Jharkhand or Bengal, where the opportunities are opening up. So not many people are looking at moving out from those states. But that is a crunch, but it's not that significant where we are struggling a lot. It's the only thing which we have seen the election has definitely impacted this Lok Sabha election. That is very impacted. But now the things are all normalized. It's not that a big gap is there.
Okay, sir. That's all from my side, and wish you all the best.
Thank you.
Thank you.
The next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Yeah. Thank you, sir, for the follow-up opportunity. Sir, just wanted to check it out on the railway project, where we have been declared as a L1. Just looking at the RLD estimated project cost appears to be 1470 crore, whereas our bid project cost is 2195 crore. So if you can give a broader sense in terms of how should we look from the profitability point of view in this project, and what has been the difference between L1 and L2 in this project, and why there is so difference in their estimated project cost and the bid cost?
So if you can just compare, the L1 L2 gap is hardly 2.53%. So that's not and L3 followed by L3 also. So this is not a big gap. Number one is because of this project is a kind of a unique combination where the highway constitutes it's not highway, it's a particularly elevated road to be developed. This is around 800 crores and 700 crores is just concourse, air concourse, which is a purely fabricated item majorly. And where the other partner is having the proficiency because they are having near to Hyderabad this big fabrication unit they have set up. So this is the two big part, and then other is the MEP and HVAC. So it's the civil part is very less in this project, where the building is already, the construction has been started. So in that scenario, the rates which we have calculated do have the margin visibility of about 12%. There is no doubt on that. So 11 to 12% margins is always there.
Okay. Secondly, sir, on the bid, if you can also throw some light on the bid pipeline on the railway, as well as you mentioned about the river linking. If you can give some more sense in terms of what are the bid opportunities which are coming up over the next 12 or 18 months, how do you see that segment growing for us over a period of time?
So railway is over a period of last 2-3 years where the EPC concept was revealed, and now the project DPRs to land to other things which are shaping up. So in that scenario, we have seen that the significant number are visible where it's a new line or it can be existing lines where the doubling or 3-lane or 4-lane is to be done. So these are the projects which we are aiming at. No doubt, this year which they are expecting that more than 70,000 crores of project are to be awarded. For this year to next year, I believe there is a opportunity on railway, which we believe is a big number. But apart from railway, highways are also giving the sense where few of the states are also giving the indication that there are expressways or some project will be there.
Okay. And if you can also give some sense, sir, on the river linking project, which we in terms of the bid pipeline, or how should we see from the next 12 to 24 month point of view?
In that context, this is one thing is the eastern Rajasthan. This is the 3 rivers to be linked in which 2 states are benefited. One is MP and one is Rajasthan. Rajasthan being the bigger, larger beneficiaries on it. And also in Yamuna river is going to, the feeder is going to be developed. So there's around 1,25,000 crores of project where the central government is given a go ahead for giving the 90% of the funding. In also Ken Betwa in MP. So these are the projects again for MP state where the state like Jhansi also in UP is going to be benefited. In Vidarbha also there are many more projects which are likely to be there. So you see this is the opportunity which earlier or 5 years back it was planned. Now it is shaping up. So I believe the opportunity is good, and in any scenario for HAM or EPC we will be looking at these sectors.
Okay. And sir, finally, just wanted to check it out on the equity requirement which would be required for this battery project. Would that be around 500 or 600 crore over the next 2 years?
This is around 450 plus crore rupees in next 2 years, correct.
Oh, thanks a lot, sir.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Harendra Singh for closing comments.
So I extend my gratitude to everyone for contributing their expertise and experience to the discussion. We value your presence on today's call and trust that we have addressed all your queries. Should you have any additional questions, please feel free to contact our investor relations advisor, that is Go India Advisor. Thank you and good day.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.